Hey, Adam Hoeksema here from ProjectionHub, and in this video I'm going to be walking you through how to acquire an HVAC business with an SBA loan. Now I'm going to be really focused on what makes the deal doable, bankable with an SBA lender, what our SBA lender is going to be looking for in terms of the financial perspective of the business that you're looking to acquire. So I'm not going to be talking about what certifications you need or what experience you need. I'm not really going to focus on that. We're really going to lean into the financial aspects of the deal and how an SBA lender is going to look at the deal. Before I dive into this spreadsheet model that I'm going to show you to kind of demonstrate this example, just a little bit of my background. I was an SBA lender for 12 years, closed about 1,500 loans, and now I own ProjectionHub, where we help folks secure SBA loans to start, grow, or buy a business. We help them through the process of creating projections and business plans to help them secure the right SBA financing. And we help find a lender and those sorts of things too if you need our help with that. So in this situation, I'm going to be walking you through an example of an HVAC acquisition, and I'm going to be using our acquisition projection template as a tool to kind of show you the process and how a lender is going to look at this deal. We will put a link in the description of the video below to this template so you can grab this and use this for your own deal. And again, if you have any questions about your deal or the SBA process or finding a good lender for your situation, don't hesitate to reach out directly to support@projectionhub.com and we'd be happy to try to help. Okay, so with that, let's look at this particular example. And this first at a glance tab is just kind of a high level projection. And when you're acquiring a business with an SBA loan, you're required to have a set of financial projections for that business post acquisition. So what does this deal look like after the acquisition? So this template helps you produce what the SBA lender is going to need. It produces a 5-year income statement, cash flow, and balance sheet, and it also produces those income statement, cash flow, and balance sheet broken down by month for each of the 5 years as well. So you'll have that level of detail, which the SBA lender needs for usually the first couple of years. They want to see the monthly detail. But creating the projections really is not the first step in terms of, hey, could this deal get done? Because the lender wants to see that this deal, that this business that you're buying could already support the proposed loan historically, okay? And so the first thing we're actually going to do is we're going to go to this historic data input tab. And usually the lender is going to look at the last 3 years of tax returns. In this example, we've only got a couple of years of tax returns. Maybe this business was only a couple of years old. But if you've got 3 years, that's what they're going to want to look at. But we'll look at 2 years. So we've got a business with increasing revenue up to $2.3 million in revenue in 2025. And we put in all of our expenses here and we get to a taxable net income. Now, in this case, though, the owner, the seller, had a bunch of add backs. Okay, so add backs are compensation that, in this case, it's owner's salary. So the owner was paying themselves a salary and it was expensed here. We can see there was compensation of officers here. And actually notice in 2025, there was nothing called compensation of officers, but you see the salaries and wages number went up by about $300,000. So in 2025, they just accounted for it differently, and the owner's salary was sitting in this line item. So we can see, the owner paid themselves a salary of $300,000. They had some personal insurance and payroll taxes that we're calling add backs, and then they had a bunch of personal expenses. And these are things that maybe the lender is going to be willing to accept or maybe not. And then there's building rent. So why are we adding back building rent? Well, because in this example, we're assuming that when you buy the business, you're also going to buy the building as well. So you're acquiring the building, so you can add back the rent because you're going to own it. Now, there are some negative add backs that we're going to have here as well, because when we get rid of the seller, the new owner is going to need to take a salary. So let's say the new owner needs a $100,000 salary. And then let's say the new owner also thinks, you know what, I'm going to need some additional help to fill the gap that this owner was filling, right? So maybe this owner was working all hours, or maybe they had a particular skill set that you as a new buyer don't have and you need to hire out for that. So let's say we're going to have a new employee salary of $100,000 there as well. So there's a negative add back. So that gets us to our seller's discretionary earnings, and we also can add back depreciation and interest ultimately to get us to this number. And this is what we're looking for from a lender perspective is the estimated cash flow available for debt service. So this is the cash flow that you should have available to make payments on the proposed SBA loan. And this is what kind of sets how much of a SBA loan we can even secure, okay? So what we're going to do is we're going to put in the proposed loan amount. And so in this example here, I've got Hey, real quick interruption, just to remind you that I offer a free SBA review. As a longtime SBA lender and financial projection expert, I've seen thousands and thousands of loan applications. So I'll give you honest feedback and advice on your odds of getting approved for an SBA loan before you even apply, and try to point you in the right direction based on your specific deal. We'll put a link in the description of the video below to that free SBA review form, so you can fill that out. All right, back to the video. I've got a seller's note of $150,000, and I've got a $3 million SBA loan. And we set our interest rate and our number of months. And we've got also our equity investment. So maybe we're bringing in some outside investors. We're also putting in some personal investment. And so this is kind of our capital structure. And that gets us to our proposed purchase price of $3,150,000. And we'll see then, based on that, the model will calculate what's the proposed annual debt service. So based on the seller note and the $3 million SBA loan with the interest rates and terms that you put in, our proposed annual debt service is $322,498. And so now we need to calculate our debt service coverage ratio, which is right here. So that's taking your estimated cash flow available for debt service, dividing by your proposed annual debt service, and that gives us a 1.69 debt service coverage ratio. Typically, lenders want to see that at 1.25 or above. That's kind of the bare minimum, which means you have $1.25 of cash flow here for every dollar of debt service. So in this case, different lenders are going to look at things differently, and it kind of depends on your personal financial strength. It depends on whether the business is growing or shrinking, improving cash flow or getting worse. But we might be, in this example, we might be able to stretch a little bit more because debt service coverage ratio is pretty strong. It's improving, cash flow is improving, the trends are improving, it's a strong industry. So let's just say we wanted to see, hey, in order to get this deal done, we actually think we're going to need $3.5 million. So let's see, that gets our purchase price up to 3.6. Let's see how that impacts our debt service coverage ratio. So that still keeps you above the 1.25 in 2024 and above it in a pretty healthy margin in 2025. So I think, this is probably a pretty good spot to be in. Now, that kind of passes the first test. And typically what I'm helping clients do is kind of do this initial analysis and then reaching out to lenders and saying, hey, look at the historical financials of this business, look at the personal financial situation of our buyer here, and can we get a term sheet? Can we find a lender who would issue a term sheet that says, yep, we would be willing to lend that amount at X term and interest rate? So if you get to a term sheet from a lender, they ought to be able to issue a term sheet based on kind of just the work that we've done to this point and your personal financial situation. And then in order to move forward, once you get a term sheet from a lender, ultimately then you're going to need to go into underwriting to get a final commitment or approval, and that's when you need the projections. So we kind of start with this baseline, and then if we need to, we're going to now create our projections going forward. So we have revenue and expense projections, and we can go through the expense projections and determine, are those going to grow? Are expenses going to grow, or what expenses are going to go away? And ultimately then, how does that impact our 5-year financial projection? And our debt service coverage ratio here is projected to be even stronger because, hey, maybe we're expecting to get rid of certain expenses that the seller has had, and we're not going to have those going forward. So we think, hey, we have even stronger debt service coverage ratio going forward. So that kind of outlines the process from a financial perspective of how an SBA lender is going to look at the deal. If you're going through this process and you say, hey, my numbers aren't working, and you want to have a conversation with me and just talk through some ideas of like, how can we structure the deal in a way to make it work for an SBA lender, but also still get the seller what they need and get the buyer, what they feel comfortable with. I love helping try to put together those puzzles and be creative. So there's lots of ways you can do seller financing, or are you going to raise more equity? Or are you going to do a contingent seller note? There's some options here. Could you put a seller note on standby to try to make the math work and also make a good deal, a good safe deal still for everybody? So yeah, if you're interested in, or if you have a deal that you want me to take a look at, happy to do that. Again, feel free to reach out at adam@ProjectionHub.com. That'll get me directly, or you can reach us at support@ProjectionHub.com to get our support from our team. All right, well, I hope this has been helpful, and let us know if you have any questions. Thanks.